In this video, I'm going to show you a high probability setup for scalping. I call it stairs pattern. First, let's have a look at some charts. This is the first chart. We can see that there's a down leg, pullback, and down leg. So this is a very good opportunity for you to short. The second is we have a up, however, it reverses. And then here's the leg with the pullback and then down again. The third, the same thing, we go up, pull back, go up, pull back, and then this is the fourth one. The same thing, breakout, pull back, and breakout. So these four charts have something in common. You can see that they start with the breakout type trend, and then they have a pullback, which is like within a rectangle. It's horizontally pullback, and then lead to another leg down or up with a measured move. So I call this pattern stairs pattern. So this pattern has a 90% of winning probability. It is very good for scalping because the basics for scalping is you want to take the profit very quickly, and then you want to take the trade on the high probability setups. So stairs pattern is one of them. This stairs pattern works on all the financial instruments, such as the cryptocurrencies, such as the stocks, forex, and also futures. Now let me show you the basic setup for the stairs pattern. Let's take uptrend for example. First, we have a breakout to the upside, and then we have the pullback horizontally within a rectangle. And then we have another leg up, like a breakout type. So this is for the uptrend. It's the same thing for downtrend. First, we have a breakout to the downside, horizontally pull back, and then another leg down. As you can see from the shape, basically it's not stairs, it's just one step of the stairs. However, I just want to call it stairs, which is easy for me. In terms of the first leg of the breakout, let's take uptrend for example. There are two scenarios for the breakout. The first is there's a single trend bar, which means there's a bull bar, which is very big, and then normally it's 2 times bigger than all the bars on its left. The second scenario is there are consecutive bull bars, one by one. There's no bear bar in between. So to get more details on what a single trend bar is and what consecutive bull bar is, I have another video, which is the candlesticks in day trading. It's a complete course for beginner day traders, so you can reference to that video. Now let's move on to the profit target. After the pullback, we want to do a measured move. So we measure from the bottom of the first leg until the top of the last bull bar. And then we do the same thing, measure from the bottom of the pullback, and then the height should be the profit target for you. So this is normally what's going to happen 90% of the time. However, you can also use your own profit target. For example, if you have a reward which is n times the risk, here n should be larger or equal to 1. And then you can take the profit using your normal profit target. However, this target should be less than the measured move. That means if based on your reward formula here, your reward cannot be beyond this level. Otherwise, it's possible that your target might not be reached before it pulls back. The key for this stairs pattern is the pullback shape and also how to enter the market. So now let me give you some examples to show you where to enter and how to identify it is a stairs pattern. There's 3 scenarios. The first one is one push. Let's have a look. First, there's a downtrend. We can see there are 6 consecutive bear bars here leading to a breakout to the downward. And then we have a pullback, which is this bull bar. And then we have another down bar here, which is the bear bar. This is the pullback. And then if you see the characteristic of the pullback is all the bodies of the 3 bars are in a rectangle. And also at the same time, all the whole candlesticks are in another outer rectangle. Though it is not perfectly rectangle, however, it's already very powerful. if you see a perfect rectangle, both inner rectangle or outer rectangle, and then the trend is very strong or super strong. So for this trend, when you wait for the pullback, and then you can enter at the signal bar. So basically, this bear bar serves as the signal bar. And then after you enter the market, you want to do a measured move. You measure from the top of the start of the trend. In this case, we measure at the top of the first bear bar rather than the top of this bull bar. And then we measure down until the last bear bar at the bottom here. This is the measured move. And again, we measure down based on the top of the pullback. This time is the top of the bull bar. If the pullback is at the bear bar, we measure at the top of the bear bar. But in this case, the bull bar, and then measure down. Here is the profit target. You want to take the profit here. You can see that the market goes down here, and then it pulls back with the tail here, support. That means other traders are taking the profit using the same measured move techniques. There can also be two pushes. So this is the example here. When the market goes down here with 1, 2, 3, 4 bear bars, and then the next bull bar is the first push, and then it goes down, and then the second bull bar here is the second push. So this is the whole pullback. And then if you do the rectangle, you can see for the inner rectangle, all the bodies are within the rectangle. And then we can also do an outer rectangle here. You can see that all the tails are within one rectangle. And then we can do the same thing. So this includes the first scenario for the one push. You can enter at this bear bar, and also you can wait for another bar and enter at this bear bar. So these two bear bars can serve as signal bars. The same thing, we do the measure move from the top of the first bear bar here to the bottom of the last bear bar, and then do the same thing from the top of the pullback until here. So this is the profit target. You want to take profit here. Now let's move on to the last scenario. I call it 3 pushes. The reason is because the pullback, you can see certainly 3 pushes. The first one, the second one, and the third one. So in this example, the market goes down first with a very big trend bar. This is what I meant. So the trend bar is 2 times larger than all the other bars on its left, even though there are other 2 follow-up bear bars. And then you can see this is the first pullback, first push, and then it has a bear bar here. However, at this moment, you're not quite sure whether it is a stairs pattern. And then we move on to the next push up. This is the second pullback here. And then you can see there's another bear bar. So at this moment, it's already like a rectangle for the body and also rectangle for the candlestick tails. And you can trade here, or you can wait for another pullback. This is the third push. You can see that at this moment, if you put a rectangle there, you can see all the inner body is within the rectangle. And the same thing for the all the tails for this period. It's like a rectangle. And then at this moment, when you see this bar, you're very sure that it should be a stair pattern. So you want to trade it. The same thing. Let's have a look at the trading opportunity. Like I said, you can trade at the second push here, or you can choose the third push here. For the profit target, we measure from the top of this trend bar to the bottom of the this bear bar, and then do the same thing. So here's the pullback top. So we measure from here until here. You can see this profit target is met as well. If you enjoyed my video, please don't forget to subscribe, like, and comment. You can also go to my channel for more videos. Thank you.